We've got Naresh Mirani joining in on the show. Also have Sandeep Sabharwal with us. Naresh, first on the charts, because it was pretty choppy up until noon, and then from there we've seen a steady move up. Does it seem like it can build on further from here?
So that's how classically we form a bottom. There is volatility. We don't see a one-way upticks. So we saw a downtick in the morning and now we've recovered. And in the downtick, we did not see a similar tick happen in the mid caps and the small cap side. So for now, we watch out for the next range, which is basically 22,800, which was the earlier support. So now we shift base from say 22,000 odd levels to 22,200 and 22,800 on the upside. And if we start crossing 22,800, then it becomes a much stronger rally. For now, it's a base formation here, maybe a range bound move from 22,200 to 22,800.
Sandeep, hi, afternoon. What's it looking like in terms of the macros with the RBI injecting further liquidity, crude significantly cooling off, while on one hand, of course, the tariff flip-flop continues. Does it seem like we could be close to perhaps bottoming out at an index level at least?
So I think I mentioned on Monday that we are fully deployed because in our view, risk reward is extremely favorable in India, given the fact that the macros will be much better next year as liquidity improves, interest rates come down, government spending improves, and a lot of disruptions which are there last year are no longer there. The other part which you mentioned obviously is there, which is the entire tariff issue. Now, the tariff issue impacts few industries more significantly from India, because if you look at the composition of the exports, it's medical devices, pharmaceuticals, gems and jewelry, textiles. I think these are the sectors which will get most impacted. And so some companies in these sectors could get impacted depending on what the overall tariff outcome is. But if you look at the picture holistically from whatever is happening globally, I think the kind of sell-off we've seen in the dollar index combined with the cooling off of bond yields, all of it points to greater participation coming back towards emerging markets. So on a pure valuation basis, although many mid and small caps are looking very attractive right now, the initial up move as foreign funds come back, which I think they should, will be on the large cap side. So I think the large caps would, I guess, move up first, and then small and mid caps could catch up.
So that's the take on a couple of these crude derivatives. But yes, of course, given the cool off in the crude oil prices, some of these paint counters are doing very well for themselves. And Kunal, wanted to have your take on the paint counters, because it's Asian Paints, Berger Paints, Akzo Nobel having a gain of anywhere between 3 to 4% right now. Do you believe that the move has just started? Which are the levels that one should be watching out for, especially some of those Asian Paints and Berger Paint?
Yeah, specifically for these two names, what was happening earlier was Berger Paints had actually made a bottom, some time back, almost 1.5 or 2 months back, when the stock made a low of 450, sub 450 mark, and from there over the last 2 months, the stock was actually moving up higher. So I think it moved to almost 500, 515 kind of a mark very recently. From there, the stock has gone back into a consolidation, and now it's trying to pick up pace again and come back to that 500 breakout zone. So I believe Berger Paints could be an interesting bet at current levels. Asian Paints, I think, could be a big turnaround candidate, because the stock seems to have formed a major divergence on the RSIs on the weekly and the monthly charts, and I believe that could probably be an indication that we could be looking at much more stronger upticks into the stock going forward.
And taking a look at the markets, some of these beaten down sectors that are having a good rebound. One such sector is the FMCG pack. And Sandeep, I wanted to have your take on this one, because palm oil prices internationally, they have been on a one-way run-up and definitely impacting the margins of the company. But given that we have already seen a good rally in palm oil prices, do you believe that that should somewhat top out in the recent past, as well as maybe it's the time to look out for some of those HULs and Dabur, Marico, some of these plays right now?
Actually, palm oil prices have not been on a straight run up. In fact, they had a run up at the same time when the import duties were increased, and that created a sort of double whammy for companies. Subsequently, they have only cooled off. But given the extent of impact which was there because of first prices moving up, then the 20 odd percent additional duty, the pass through of the prices will obviously take time. So I think that would have happened to a great extent now. Recent sell off in FMCG and some consumer stocks was due to some sort of analysis done by some people that because stock markets have fallen, so consumption is going to suffer. I think that's very illogical because last 2 years stock markets were moving up. So did that impact consumption positively? Consumption actually was subdued over the last 2 years. So I think it's inflation, it's interest rates, which are the main factors which impact the consumption rather than what is happening in the stock market in the near term. So I think to that extent, the bottoming of the performance has happened. What kind of volume growth will play out, that we need to see, because the recovery cycle is still to accelerate in any meaningful manner.
Sandeep, given that you're all in the market right now, is the largest allocation or recommendation of allocation towards financials at large, both banks and NBFCs and even MFIs?
But I won't say it's largest, but it should be a decent allocation. NBFCs, banks, the larger banks, and the corporate focused NBFCs, etc. I think they should be a decent part of the portfolio along with infrastructure oriented companies. Auto should do well next year, but then because of this entire tariff thing, we could see the auto stocks remain subdued for till the end of March. But I think next year should be overall good for autos as such.
All right, but Sandeep, also share your take within the metal pack as well, because off late they are doing very good and these stocks are seeing no stopping. So do you believe that is it a time to look at some of these metal plays, and within that any particular stock that is looking good to you?
Globally, metal prices have not moved up as much, but the sentiments have obviously improved because of one, European companies announcing that they'll be spending more on defense, and as such, that obviously requires more of that will require more consumption of commodities. Plus, China also announcing an increase in the fiscal deficit for next year and focusing more on reviving the economy. So I think these are the sentimental factors impacting metals in the near term. So metals could continue to do well, but then there is significant oversupply still in steel. So I think to that extent, the rally could still continue, but I wouldn't say that it should be a trend reversal.
Sandeep, you've gone on record and given us your calls when it comes to both infra as well as banking names. But when it comes to auto, it's largely the two-wheeler segment that you're recommending exposure to. What about the passenger vehicles? I mean, tariffs, of course, is one story, but there's also Tesla's entry into the Indian market. Do you think that's going to have any sort of repercussion for the likes of a Hyundai or even an M&M and Tata Motors?
So the impact could be in the long term if these companies don't innovate and adapt, because the initial presence will be limited. They'll take a long time to build a pan-India network. So in the metros, some people might be inclined to buy those cars, and that also we need to see how the government moves on the entire import duty front, because they have a scheme where you can import 8,000 cars at a lower duty if you say we'll invest 4,000 or 5,000 crores, something like that. But that itself is a time consuming thing. We'll see. But overall, I think markets, I think the market, if the overall market is doing well, it can absorb a company like Tesla coming in, because it's not going to dominate the Indian, the entire automobile space, at least for the next few years. So The largest allocation we have is in Mahindra and Mahindra. They continue to do well. I think they'll continue to do well going forward also. And in terms of two-wheelers, I think both Hero MotoCorp and Bajaj Auto are looking cheap. So we have been buying Bajaj Auto, but it's come down. But I think it has significant value at the current prices.
Watch out for Bajaj Auto, and that is the stock that even Kunal was flagging off this morning on the technical front, of course. But Sandeep, within the auto ancillary pack, any particular segment that is looking good to you right now? And specifically, if you can share your take on the tire counters, one of the crude oil beneficiaries, and given the fact that the demand is expected to be steady, especially from the two-wheeler segment, the passenger vehicle sales is expected to be just flat when it comes to the domestic market. Do you believe that this is the time to look out for some of these tire counters, given the fact that in the past 1 year, stocks like CEAT, Apollo Tyres, they have only underperformed?
I think the sector overall seems to be well placed because last few quarters they have taken a big hit on the margins because one, the tire prices could not be increased. Secondly, we saw a huge spike in rubber prices. Now rubber prices have moderated over the last few months, and going forward, I think we could have seen the bottom of the margins for tire companies, or we could see the bottom in this quarter. I guess it's possible that it would have happened last quarter. On top of that, crude prices have also come down, so crude input derivative prices will also come down. So, and valuations are cheap in the overall tire industry landscape. So I would think that this sector is a decent one for people who are value investors at this stage.
Kunal, what's your thought though on Asian Paints? Does it seem like it's bottoming out or close to it?
Yeah, it looks like, because I think both Berger Paints and Asian Paints, both of them, they were at a point where these stocks were huge underperformers, specifically Asian Paints. When you look at it relatively in terms of large cap names, in terms of the way the stock had behaved in the last 2 years or so. So I think it looks like now that Asian Paints is coming out of that deep underperforming zone. The last 2 days of candlestick pattern volume pickup today specifically, I think indicates that this is a wave of a fresh buying into the stock price. And then I think even for Berger Paints, I would believe that closer to the 500 mark, one could look at a potential breakout. So if it's a near-term play, I would look at Berger Paints with a potential target of 540, 550. But if it's more of a medium-term time horizon, then I would probably believe Asian Paints could be at the cusp of a turnaround.
All right, that's the take coming in on Asian Paints on the technical front. But with this, Sandeep, we'll let you go on that. Really appreciate you taking the time out and speaking with us this afternoon.